Our guest this week is Mike Cardamone, founder and managing partner of Forum Ventures. Forum is a New York-based firm with a structure that layers together an accelerator, studio, and pre-seed fund. We talked about why Forum likes B2B SaaS, how Mike sizes up AI opportunities, and why new investors into startups might be making a mistake by following big brand VCs in early stage deals. Please enjoy. Mike, thanks for coming on the show.
Yeah, appreciate you having me.
Well, we caught up a couple of weeks ago just talking shop, and you mentioned that Forum to celebrate his 10th birthday. So congratulations on that.
Thank you. Yeah. Appreciate it. Big, felt like a big milestone. We'll see.
Yeah, it is a big milestone for someone who just wrapped up year one. 10 sounds like a lot. So that's well done. How about you get us rolling by telling us about Forum Ventures?
Yeah, sounds good. So started it 10 years ago, initially as a B2B SaaS-focused accelerator. So there's a lot of generalist accelerators like Y Combinator or Techstars or 500 that folks have probably heard of. And at the time, there were only a few in the country focused on B2B software companies. And I felt like we were kind of early innings of B2B, of that shift from like on-prem to cloud and to SaaS. And I was fortunate to be early at Box, like 25th employee at Box, which is now a public company, which was like one of the early generation of SaaS companies that got big in Silicon Valley, and felt like there was an opportunity to like try to create a playbook around go to market and help a bunch of companies go from 0 to 1 in a very tactical way. And now fast forward 10 years, we still run the accelerator. It's a big part of what we do. We're on our 5th accelerator fund. We've invested in over 500 companies through the accelerator now, where we're usually first check in, it's founding team, some early version of a product. They may or may not have revenue. And then we get in the weeds with them almost as like an extension of their founding team to help them get from kind of that early or no customers to some customers and then raising like a pre-seed or seed round. And we've done that over and over again for 10 years now with hundreds of companies. And then we've now built the platform out to include 2 other products as well. So about 4 years ago, we launched a pre-seed fund that sits on top of the accelerator, more of a standard kind of pre-seed fund. About half the deals we do are follow-on investments in our own companies that go through the accelerator. So we get to know them for a long period of time. We then pick like a very small subset of them that we are able to follow in on out of the pre-seed fund. And then half the deals we do out of the pre-seed fund are generally outside the accelerator, typically where we have an existing relationship or in a space we have a kind of strong thesis around. And then we layered in a venture studio as well about a year and a half ago. So we have 32 people full-time on the team. 11 of them are focused on the venture studio. We're starting about 6 companies a year out of the venture studio, where we start companies from scratch. So we come up with ideas or work with founders who have ideas. We kind of iterate, do customer development, try to figure out if there's an opportunity there, bring in a CEO to kind of work on it with. If we decide it's a go, we form the company. We put $250K on the balance sheet from day 0. We help build their MVP. We help with get their early customers. And then we kind of put them through the rails that we've created for the accelerator to help with like go to market and follow on funding for pre-seed and seed rounds. So we have three products across the platform today and 32 people full time, kind of spread across North America.
Is the underlying thread between all of these the focus on adding direct value for your startup? So rather than picking or sourcing, driving ultimate returns here for your LPs and Forum, is it really largely about your ability to dive in, get your hands dirty, and help these founders to create more value?
Yeah, I mean, the thought process has evolved over time. I think when I first started it and started with the accelerator, it was as simple as like I was an operator and I had dabbled in angel investing, and I felt like the accelerator was both an interesting way to deploy what I knew would be a small amount of capital for my first fund, and a way for me to like scratch the itch of both investing and operating, because I could be like much more hands-on than probably a traditional fund would be. So it started out as simple as that. As we've evolved, I think, and scaled the business, I think we think about it, there's 2 customers here. There's the founders and the LPs. We think each product, from an LP perspective, each product creates a different risk reward profile and different type of like, kind of floor and ceilings. And so we think like blended together, it's actually like really interesting set of products for LPs who are looking to get into venture and invest in the venture asset class. And then from the founder perspective, we view it as like our whole mission is to work with founders, support founders, help them through their journey of getting from like zero to, we call it sustainable, or which is like Series A or self-sustaining. And we just view these products as different points in the life cycle of a company that we can get involved to help a founder. So we think of the studio as like -1 to 0 of like, okay, there's a lot that goes into before you even start a company. There's a lot that goes into validation and like understanding, are you going after the right problem? Who are you selling into? What's the ICP, like ideal customer profile? And how do you reach them? How do you price this thing? Like all the things people think about, like oftentimes founders, when they start a company, they've been thinking about it and like working on validating the idea for months, if not years, before they actually form the company. And so we're trying to like take that piece of it and create process around it, create like systems around it, and make it repeatable around that front. We view the accelerator as a way for us to have an impact on a high volume of companies at that like very early stage where it's like, okay, I formed the company, I quit my job, I'm going after it, but like, man, this is lonely. Man, it's really hard to like get our first 5 customers and getting the support around you. And oh, I've never fundraised before. Like, how do I play this VC game and tell the narrative that VCs want to hear, and all that kind of stuff. And like that, we feel like the accelerator is our like opportunity to help companies there. And then the pre-seed fund is just like a tick later where, okay, now you have some capital and some resources. You've raised $1 million, $2 million, $3 million round. Like, how do you think about your first few hires? How do you then think about going from pure founder-led sales to maybe bringing in your first SDR or AE? And all of that is just, the common thread is like being maniacally focused on founder experience, supporting the founders, and just understanding like what are the things that matter at each of those stages, and can we build systems and process around each of those, and community around each of those, and learnings around each of those to help kind of increase the probability of success at each of those stages.
I've met with founders coming out of every accelerator that listeners could name over the past couple of years, and I will say the ones coming through Forum tend to be much higher quality and better put together than the startups I see from other accelerators, which is great.
I appreciate that.
Congrats. Yeah. What do you chalk that up to?
But I am not a naturally extroverted person. I kind of force myself to be because I have to be in this role. My building brand is not my strength. And so I said like, okay, for this to work, I need to just be so focused on founder experience, like measure NPS of the founders, make sure the founders have an amazing experience so that when they graduate, they tell other founders about us, and over time we can build the brand organically that way. And turns out, I think that worked. It took way longer than I thought it would to happen. And we did end up eventually like rebranding from, we were originally called Accelerators to Forum, and have now really invested in brand. And that combined with the kind of an army now of founders who speak highly of us, I think has made a big difference in them being able to source better and better founders and companies over the years. And I think the other is like, unlike most VCs who invest in a handful of companies a year, like we're investing in 100 a year right now across our 3 products. We've had a lot of data points to learn from. And so just like understanding, what do we think needs to be true to raise that pre-seed or seed round? Do we think this company can get there during the accelerator? Do we think we can help them get there? And so I think part of it is just like being thoughtful around learning from a lot of the data that we have over 10 years.
Maybe to go back, and fairly core to what you're doing is the focus on B2B SaaS. Can you expand on what you love about the model and why that's the specialty that you're focused on?
Yeah, so when I first started it, I felt like we were still early innings of the shift from on-prem to cloud and SaaS, and I felt like there was a lot of room to run, which turned out was like a pretty good thesis.
Very
like
accurate.
That's how it played out. And I think, over the years we've had to like figure out, okay, beyond just pure B2B SaaS, like there's B2B marketplaces, there's SaaS enabled kind of service businesses. And so we've kind of broadened a bit around where we invest within B2B. And especially at the volume we're at through the accelerator, like we're fairly opportunistic because we see things that we never would have thought of from like a thesis standpoint where we're like, oh, wow, that's actually a really interesting opportunity. And usually that's in the form of some like vertical solution where we never would have like thought of that market, but there's some like regulatory change or something that happened in that market that creates an opportunity. So anyway, so we're pretty broad at the accelerator. I would say at the pre-seed fund, we've tend to honed in on a handful of areas where we spend more time from like a thematic standpoint, doing like market research, building very thoughtfully building network of customers and connections to help validate ideas and help diligence ideas. And that's typically around like health tech, so B2B health tech, selling to like health systems or providers or payers. We do a lot in like supply chain logistics. I was an early angel investor in Flexport, and so I've been following that journey for 11 years now and know a bunch of people on the team there. We've invested in a bunch of ex-Flexport people who have come out and started supply chain logistics companies. So that's a space we've spent a lot of time thinking about and researching. We do a lot of like vertical SaaS, vertical AI type solutions, and then a lot of like B2B fintech. One of my partners has a background on Wall Street and then started a SaaS company, but he tends to lead a lot of our fintech ideas. And as SaaS has evolved, like I think we've gone through evolutions of SaaS being like the hot thing to SaaS being like not the hot thing, where multiples have gotten crunched in public markets. And now there's this whole wave of AI. And I think we just view it as, at the end of the day, like businesses need software to solve problems. And the reality is like most new software is getting built today are leveraging AI to solve that problem more efficiently or effectively than the last generation of SaaS companies did. And so then our job is to like still the same of like, we need to find software that's solving real problems for real businesses that will pay for it. And now often all of those have some component of AI or aspirations of building AI into that. But we think it's still fundamentally the same thing of like, you have to be solving a problem or automating away like an actual measurable cost center or generating new revenue. Like same thing that the last 8 years of SaaS was. Just you tend to be able to do it better and more efficiently now, which is great.
What do you like about health tech and supply chain in particular?
I think both are recession proof, massive industries that I think are like still relatively early in the adoption of technology throughout all of it. And so I think there's still just like a really big opportunity there from an investing standpoint and building big companies standpoint. So yeah, those are both areas where I think they're not easy spaces to invest in or execute in or sell into. But I just think like there's such a good investment opportunity there that there's spaces we continue to look at closely and research and invest in.
I think there might be something there too, where a lot of investors just don't think. I agree with all that. I think they think of those spaces as not being particularly sexy or dynamic. And
Yeah,
when they talk to, sometimes when I talk to established VCs and they're giving me advice, some of it will veer into investing in consumer names or startups that potential LPs might be more likely to hear of because it's more relatable to them and it's better for building the brand of the firm rather
yeah,
than nailing it with a fantastic B2B SaaS company that may not be something that's consumer centric or reach a scale like a box, which is
right.
enormous, but can still do incredibly well. Or supply chain, right? Like talk about behind the scenes. Curious if
Yeah,
you run into that.
yeah, for sure. I also think the other thing with health tech is like some of the things we're investing in, if they work, can have a great societal impact and like human impact as well, which is kind of nice. Um, so yeah, I think that is true though, what you said. I think less investors look at those because they're not as sexy. But yeah, I like that. Less competition there.
Absolutely. When you're looking at vertical AI companies, how do you think about, is this company going to sustainably build a solution that's better than what the horizontal platforms that are kind of boiling the ocean will ultimately get to?
Yeah, I think it's part of it is just trying to figure out like how nuanced is that vertical or that workflow relative to it. And often when they're using some horizontal software solution, they sometimes if there's enough nuance in it where it requires something specific to them, like often they're building stuff on top of it, or they're like they're layering some other thing with the like legacy horizontal solution, and you can start to see there's like it's not a clean solution there usually, or the vertical solution is can be so much better than the horizontal that it's like very noticeable, and you can talk to customers and they will validate that, where it's just significantly better, like orders of magnitude better, 10x better, that it's just an obvious that they would switch. And I think the other thing is like how high are the switching costs, and how sticky is the legacy solution they're using, and do we actually think you can like rip and replace it? And usually that means like you pick off features to start, and then as you build the product out and it becomes more mature, then like eventually can you rip and replace that, and do we think that's possible? Because it's hard to rip and replace like a big horizontal legacy solution out of the gate. So then what we look at is like, do we think you can actually, will they pay for you to rip off like certain features or certain parts of the workflow? And then do we think there's a path to a rip and replace over time? So those are some of the things we'll look at for a vertical AI company.
How are you thinking about AI evaluations? There's a lot of promise with AI, and obviously there's a sea change and a lot of opportunity, but also
Yeah.
no secret that valuations
Yeah.
for AI software startups are much higher than any other slice of the market.
Yeah. We tend to be fairly price sensitive or conscious of price. And so, yeah, I mean, I think that just like in 21, like, there's a lot of companies that are raising at very high valuations that I think are just going to take years to grow into that. And maybe you can do it a little bit faster if you've got really good technology, or maybe it's just really capital efficient if you're trying to build like a new foundation model. And some of those companies need to raise a lot of capital. But for a lot of the solutions we're investing in, it's software that has AI as like part of the product, and generally like can still do it fairly capital efficiently, and should also then be valued similarly to how software companies are valued. And I think entry price really matters when you're investing. And so, we tend to try to be pretty disciplined around that. But certainly we've seen some of our companies get very high valuations, which is fine after we invest.
Very, very welcome. New York's second largest venture scene in the US, one of the largest in the world. What does New York do really well in startups?
I think they do a good job. So, just for context, I started this in San Francisco. I was out in San Francisco for 9 years. I moved to New York about 7 years ago to launch like a New York office. We were originally all in person. We had an office in San Francisco. And I think the difference in New York from then until now is pretty astonishing how much the tech scene has grown. And I think a lot of it is just the traditional industries in New York embracing tech and like getting involved in the ecosystem. And so I think New York has the advantage of like a very diversified set of large mid-market enterprise, small businesses, like all up and down the stack of size of company, type of company. And I think, there's a lot of those companies are getting involved in the tech scene and in the community, and are open to like looking at innovative ideas, and are connecting with VC firms. And I think that makes a big difference, because if you have a bunch of anchor customers there as a software company, like you're going to want to spend a lot of time in this market and or move to this market. And then I also think there's been a big growth as in probably every market, but I think New York more so than anywhere else has had a big growth in the number of VC firms and capital being deployed. And so I don't know, if you're a early stage startup founder, like you tend to follow capital and customers And I think New York has an abundance of both, which is great for the market.
For the accelerator, is that all in person or is it distributed?
We have the most like expensive cities in the world. And so we said, okay, what would this look like if we were now forced to do it virtually? Like, how would we do this virtually? And then how do we still layer in and make sure we get the benefits of a lot of the in-person relationship building? And so we moved to a model where we like centralized operations, all the programming and MD one-on-ones are largely delivered virtually. But then we are like thoughtful around where we have MDs around the country and people on the team in the country. So we have like people in New York, we have someone in Boston, someone in Chicago, someone in Vancouver, someone in DC, like someone in Austin. So we have a lot of like places where we would want kind of feet on the ground in the ecosystem going to events. We have people there, and then we throw a ton of events ourselves for our founders. So we'll have like 50 plus events a year, and we get our founders together both for like new cohorts coming in, health tech companies, supply chain companies, like we try to do a ton of events to create that like in-person community relationship building. We're doing like a camp up in the Catskills in a couple of weeks where it's founders from like pre-seed to Series B. And then I think all of our team or mostly our whole team is going. So we try to do a lot of those sort of events to still have that in-person community and relationship building, but a lot of the programming is delivered virtually.
So YC is in person, most of Techstars in person. Do you
Yeah.
find being virtual is an advantage between that and the specialty on B2B and SaaS in particular? Is that a differentiator with
Yeah.
founders?
I think there are pros and cons to being virtual. The obvious pros are, you don't have to force people to move, and so you end up like, you know, like YC is all in person. My guess is their founders skew younger, because it's just easier to like pick up and move when you're younger. And I think, I don't know the stats, but I think our founders, I bet on average are like low 30s, right? And so like a lot of them, maybe are starting to have families and kids and have a mortgage, and like up and moving to a city for 4 months is just not really an option. And so I think it opens up the types of founders that we're able to get in to the accelerator, which tend to be like they may be first time founders of a tech company, but they're like pretty seasoned operators in whatever industry they're in, and like have a lot of insight and knowledge around that industry and the pain points around that and the problem they're solving, which I think is an advantage in most cases. So anyway, so that's the obvious pro. The con is, you know, the relationship you build when you're working side by side with a company is hard to replicate virtually. And so we do everything we can to try to replicate that. And I think there's advantages to having that like deep relationship with the founders, and the founders getting to know each other. And so we just need to be like really thoughtful about trying to replicate as much of that as possible, connecting the founders, connecting our team with the founders. So there's pros and cons. And then, yes, I think being focused on B2B SaaS and keeping the cohort sizes relatively small. So each MD will only work with like 10 to 12 companies at a time max, allows us to be more of that like extension or founding team and very hands-on than maybe other companies. And I think being focused around it allows us to be more focused around specific go-to-market help versus high-level advice from like a really successful operator, but maybe someone who did a completely different business and it's not overly relevant to building like an inside sales machine. So I think we can be just like more focused around go-to-market, which we think is like one of the top ways to move the needle for companies during the accelerator, is to like really hone in on the go-to-market motion.
What's your view on the accelerator market overall? YC and Techstars, very public, have reset as far as their size, number of companies coming through, their scale. And I can't help but think that a lot of smaller accelerators that don't have some longevity that you have and, some runs on the board, this environment could be awfully tough for them to muddle through. How are you thinking about that competitively?
Yeah, I think uh, I think YC has very clearly entrenched themselves as the leader in the accelerator space. And I don't think that's going to go away anytime soon. I think their brand is too strong. They've had too many successes. I think beyond that, like, you're going to see the long tail of smaller accelerators that haven't been around as long, I think are going to struggle. As with emerging managers, there were, I don't know, 3,000 emerging managers, that kind of started funds over the last 3-4 years. And I think you're also going to see some attrition there, unfortunately. I think you're going to see the same with accelerators, but I think where we think about it is like, okay, how do we kind of solidify ourselves as like a top 5, top 3 accelerator in the world by continuing to just stay focused on founder experience, stay heads down, executing like incremental growth in volume, but not rapidly growing, and just like really continue to execute well around it. Because I think the model we've set up allows us to be very aligned with just investing. Like, we're not reliant on revenue from like corporates or, sponsorship revenue. Like, we're set up and structured in a way where our operating budget is like very tied to just our funds. And we have anchor LPs who are very committed to continuing to fund us in that format, so that we don't have to be reliant and distracted by selling corporates on, a branded accelerator or, pay to play to like show them companies. Like, we don't want to be in that game. And I think that's where it becomes hard when you start doing that, because, incentives aren't necessarily aligned with the founder experience and like just finding and supporting great founders. So anyway, I think we're set up and structured in a way that it's on us now. Like, we just need to continue to execute really well. And I think we'll have an opportunity to really kind of be a force in the accelerator space for hopefully decades to come here.
What's something you've changed your mind about in the last few years?
When we first launched the pre-seed fund, you get a lot of questions from LPs around like, well, who are the co-investors in the round? And I find that you end up getting a lot of emerging managers who optimize for investing alongside brand name funds because they feel like that gives some amount of credibility to LPs and might be a good signal to help raise the next fund. And especially in a time now where like the time in between rounds is longer, I think emerging managers, including myself, like over optimize for that. And I think what I've changed my mind on is like, I actually don't want to be investing with the brand name funds in that first round that we're investing in, because I feel like usually when they're coming down to like the stage we're investing in, it's like a tracker check. It's a rounding error for them. They're not really paying attention. They're just waiting for the ones that like really hit an inflection point so they can put more money in. And what I care about, and you're not going to get the ownership you want or like the size check you want into the round, and they'll probably make the price higher than it should be because like they don't really care what the price is in that round. And so what I want to do is get into the companies before they get in. And then I care a little bit about like who follows on afterwards, but I no longer want to optimize for like trying to invest alongside a brand name fund. I think if we're investing alongside a brand name fund, we're probably too late. Like, we should have found them first.
Well, Mike, this has been really fun. If someone, let's say a founder they want to connect, learn more about Forum, what's the best way for them to do that?
Yeah, our website is probably the best place. We have a form on there you can fill out. We review all of them. The investment team reviews all of them. I'm just Mike at Forum VC if people want to email me. We're pretty active on LinkedIn, X, I guess, Twitter, X, whatever it is now. So yeah, just happy to connect with anyone.
Awesome. All right. Thanks, Mike.
I appreciate it. Thanks for having me.
Hi, Joe again. Thanks for watching the show. If you'd like more of this in the future, subscribe to our channel. If you'd like to learn more about Seaplane Ventures, just check out seaplaneventures.com. Cheers.